Fourth quarter's, we expect production to be up somewhat. I mean, we've gone through a very significant inventory correction across our global dealer network. And we've been taking a lot of inventory out of our own in-house system. So we expect production to begin to crank up just a little bit in the fourth quarter. We did issue our initial outlook for 2010 in the third quarter release. And there, I think maybe what you're speaking of, the optimism, we call for increase of sales next year of between 10 and 25%. That's a pretty big range, I know, at the moment, but there's still a lot of macroeconomic uncertainty. But the 10%, for example, at the lower end of that range would just be if the retail sales, if you will, at our dealerships around the world held about flat, the inventory cycle being behind us, our sales will increase about 10%. We think likely the industry, global industry for our machines and engines on a worldwide basis will be up about 15% year on year, following this very sharp recession that's occurred and driven industries to very low levels in 2009.
And if we look at your African operations, what is your growth strategy there?
Well, South Africa and the southern cone of Africa is a very important economic region of the world, as we would think about it. It's certainly an emerging market. South Africa itself is important because there's an emergent middle class here and a lot of spending on infrastructure and other things within the country. But you're a key natural resource supplier and exporter to the rest of the world. So in our view, the key to the global economy has been this emergent growth, particularly in the highly densely populated emerging markets of China, India, basically all of Southeast Asia, parts of the Middle East, and Russia, which have an emergent middle class, growth rates which are well above the OECD level, which are now generating demand for a lot of commodities. And we think as a major commodity exporter, that's going to benefit the southern cone of Africa substantially. I mean, you have copper and iron ore and coal and other commodities required to sustain economic growth in this emerging market theater that has a growing middle class. And that in turn, that virtuous circle will lift the South African mining industry and therefore a lot of employment, because not only mining, but you've got to have the infrastructure to get it to port and ship it, and it creates employment, and it creates therefore domestic demand in South Africa. So we think the global economy in 2010 will have a pretty reasonable bounce back from the severe recession that we've experienced in 2009.
Are you going to enter other markets in the African continent?
Well, we already have strong dealers and strong dealer support capabilities across the whole of the continent. We have a strong parts distribution logistics center here in Johannesburg that supports not only South Africa, but the whole of the southern cone up through sub-Saharan Africa. We're looking at building another large parts distribution center in Dubai that will be principally for the Middle East and North Africa, because parts availability and world-class excellence in product support is very fundamental to our customers. And then we're looking, to develop over time suppliers in the region. And I would hope, one of the things I think is exciting about the way Barloworld is structured and the way they work with dealerships in the southern cone is they're really working on transferring best practices and training and developing people. Yesterday we opened a new service technician training center here in Johannesburg. They'll be able to train service technicians to take care of very sophisticated equipment, and they'll be able to train about 2,000 people a year. So not only South Africans, but skilled technicians will come from all of the regions south of the equator that Barloworld covers. That'll help them have great service support in all their branches around the region, and in many cases will help train service technicians that are working for our key customers, be it the mining industry or large construction contractors. So we're very excited about that. They've made, in the throes of a recession, I think this shows the strength of our companies. Barloworld stepped up with 120 million Rand investment to create this new training center. and that's just been completed this year. So I think this is a company that sees its future. In fact, our combined future is really a function of having the best people, most qualified, and having them be an integral part of our team and focused on taking care of our customers. So we at Caterpillar are thrilled with Barloworld's investment. And also, as I've had an opportunity to interface with their senior management team that in the last couple of days I've been back to Johannesburg. I am very impressed that they're recruiting some of the best and brightest young and middle managers they can find in the country, and really creating a focus on serving our customers and being the kind of local company that both South Africans and we at Caterpillar would be very proud of.
And you were also involved in steel fabrication. There's problems right out there. There's wars in the steel industry regards to supply and pricing. How has that affected your business?
Well, we're probably the largest buyer of plate steel in the world, and so we shop the world. We buy steel, in Asia, in Europe, in the Americas. We try to get the best prices on steel of the grades that we need, and process it very efficiently in terms of our burn to shape and our fabrication technologies for thicker plate steel that's used in our kind of equipment. I'd like to think, as one of the largest buyers in the world, and hopefully one of the smarter buyers, we get steel at competitive prices. Steel prices have fluctuated, and we think will continue to fluctuate significantly going forward. The key for us is, can we buy the steel as cheap or cheaper than all of our key global competitors?